Hey everybody, welcome back to Whiteboard Finance. My name is Marco and I'm here to help you master your money and build your wealth. It's 2023. Happy New Year to everyone watching this video. I hope you all have a great 2023. The reason I wanted to create this video, which is going to be talking about what I'll be investing in 2023, most likely, is just because a lot of new investors are getting spooked. If you look at the S&P 500, we're pretty much down 20% year to date. There's been a lot of volatility. A lot of people don't know what to put their money in. So I've been investing for a pretty long time, since I was 18. I'm now 35, so about 17 years now. And I've learned a lot of things, and more behavioral things and psychological things, more than just what to buy over those 17 years, because that changes all the time. But this is more about staying the course for some of the younger investors. So that's where I want to move forward with this video. So this is not going to be a PowerPoint presentation. This is basically just me giving you a list, and then I'll share my computer screen here. So number one is going to be equities, aka stocks. Here's a quick shot of my Charles Schwab portfolio. And I'm going to go to something right here, history. So when I click on history, I'm going to sort this by buys, so you can only see what I've bought. But basically, this is just to prove a very, very, very quick point, okay? And this is not going to tell you exactly what to invest in. It obviously needs to fit your investment profile and your risk tolerance profile. But here's a quick example. So if you look at the dates here on the left, you can see that I buy stocks every single week, like clockwork. Every 7 days or so, I am buying equities. I'm buying stocks. This is because I subscribe to the philosophy of dollar cost averaging. So if you don't know what dollar cost averaging is, just very quickly in a nutshell, you are buying pretty much the same dollar amount over the same interval. So with this portfolio, every week, every Monday or Tuesday, I buy $1,000 worth of stocks, not just the one that you see on this screen here. There's many more than this, but just for the sake of this video, I'm not going to go into that. But like clockwork, I dollar cost average. I also dollar cost average every single week in my M1 Finance SEP IRA dividend portfolio. So you can see here, December 5th, December 12th, December 19th, 26th, the 2nd, I put in $230 every single week, $1,000 a month. And I've been doing this for, I want to say, like almost 3-4 years now, and I've been sharing this publicly on the community tab of my YouTube channel. So the other thing that I'm going to invest in, and I do have like Roth IRAs, I do have other portfolios, but just for the sake of this video, I want to show you all the types of equities I'll be investing in. So this right here is a 529 plan for my daughter. I believe in Ohio, every $4,000 for the year is able to be a write-off, so it actually reduces your taxable income by $4,000. So that's what I'm going to invest this year. I'm going to put $4,000 in the 529 plan for my daughter. This is Ohio. I'm from the Cleveland area, so I don't know what your state is, if it's any different, but I can only speak for Ohio. And just so you guys know, Cleveland is not Ohio. So when people make fun of Ohio, that's fine. That doesn't include Cleveland. We're not Ohioans, if you will, if that makes any sense. But the reason I dollar cost average, you guys, is because no one has a crystal ball, right? Okay, I started investing right around here, 2006, okay? And you can see literally like a year later, I got my teeth kicked in by 30-40% during the great financial crisis. And ever since then, we don't know what the Fed is going to do. We don't know what macroeconomics is going to do. We don't know what policy is going to be. We don't know what the political atmosphere is going to be like, or the political environment is going to be like. The only thing you can do, in my opinion, without having a crystal ball, is to invest early and often and at a repeatable interval. So that's why I dollar cost average. So perfect example of that most recently, what more people may remember, if you haven't been investing for that long, is cerveza sickness, March of 2020. No one could have predicted this going down, 20, 30, 40% in literally just a month. And then no one else could have predicted that we'd see unprecedented money printing, which led these markets to new all-time highs just months later. Okay, so that's why I dollar cost average, because as long as the market goes up and to the right, you're most likely going to see an increase in your portfolio. Okay, so moving on. Number 2 is going to be something that some of you may be familiar with, which is what we call I-bonds. Okay, so with I-bonds, I'll show you right now. At the time of this recording, the latest CPI numbers since November of 2021 is basically just over 7% inflation. Okay, So inflation was running hot. I did a couple videos about this earlier in the year. Real inflation was probably more like 20-25% for everyday household items. But overall, it came in at like 9 or 10, right around there. So the reason for this is because I want to show you what I bonds are. So right now I invested $10,000 in I bonds maybe like 5-6 months ago. That grew to about $10,236, which you can see right there. My wife also has $10,000 in her name, and I literally, a few hours ago, it's January 2nd at the time of this recording, I bought $10,000 more of I bonds. You're only limited to $10,000 per year. So the reason for that is because these are actually inflation adjusted, okay? This basically measures the CPI, and it gives you a comparable return. That way you can at least put away some money and somewhat combat inflation. This is going to be different than a savings account, which I'll get into in the next slide. So for those of you not familiar with I bonds, very quickly, they basically compound semi-annually, meaning that every 6 months, you apply the bond's new interest rate to the principal value. This is typically being compared to CPI, or the inflation rate, the consumer price index. So without making this whole video about I bonds, all you pretty much need to know is, where is it? You can redeem them after 12 months. However, if you cash in the bond less than 5 years, you're going to lose the last 3 months of interest that you earned. So for example, if you cash in the bond after 1.5 years, 18 months, you get the first 15 months of interest, you lose the last 3, okay? That's pretty much all you need to know when it comes to I bonds. You can dig in a little bit further. I buy them from Treasury Direct. I've done videos on how to use Treasury Direct in the past on how to buy T-bills. The process for buying an I bond is no different. Okay, so investment number 3 is going to be cash or T-bills. So how can you invest in cash? How does this even make sense? So what I mean by investing in cash is just setting aside a war chest. So I talk about this all the time. I've been talking about this for years on my channel. When you think of cash, a lot of people think of cash as kind of like an emergency fund, playing defense or being, risk averse, if you will, by keeping it in a savings account. I look at this as both offense and defense. So 2023 is probably going to be a difficult year, especially if layoffs continue. If that continues, then we're going to see unemployment rates spike up, and we're also going to see a weakening of the economy. That's when I really think real estate and other things I'm going to talk about in this video are going to drop, which creates an even bigger buying opportunity for your war chest, meaning the cash that you have saved. So I personally use Capital One 360. It's a performance savings account. It's a money market account. It's earning 3.3%. So I'm going to show you that real quick. So you can see here, you can have 2 different ways to save in cash, or 2 different ways to save for your war chest. You can keep it in a high yield savings account. These guys right here, it's earning 4.1%. If you go to another bigger bank like PNC, for example, they even have a 4% annual percentage yield. Again, Capital One 360, which I use, is 3.3%. I have all my money in there. Maybe I'll switch, maybe I won't. I've been using it for years. The other thing is, with T-bills, these are the latest auction results from T-bills. You can see here the duration. It could be a 4-week T-bill, 8-week T-bill, 52-week T-bill. And you can see basically the rate that you're getting on these bills by locking up your money by buying treasuries, okay? I have a video on how to do this. Just search my channel. It's pretty easy. You can do it through Charles Schwab. You can do it through Fidelity. You can do it through Treasury Direct. This website is Treasury Direct that you're looking at right now. This is the most recent auction results, which you can see right here. So you can either go the high yield savings account route, or you can go the T-bill route. And if you want to lock up your money for, let's say, a month, 4 weeks, you're going to outperform a lot of these savings accounts. If you go for 8 weeks, you're definitely outperforming. 17 weeks, so on and so forth, okay? Pretty simple here, you guys. So with cash, again, if stuff really hits the fan in 2023 or 2024, I want to get my war chest up to a certain amount because, yes, I'm still losing money to inflation. Remember, inflation is right around 7-8%. You're earning 3 to 4% in a T-bill or in a savings account, so savers still are losers. You guys have to realize that. But it's better than earning 0.01 or 0.1%, which it has been in the past when interest rates were really low. Make sense? Okay, so moving along, number 4 is real estate. I feel like everyone should have real estate in their portfolio, whether it's through real estate investment trusts, whether it's through syndications, whether it's through owning actual tangible real estate. There's a bunch of different examples when it comes to investing in real estate. I actually just did a video on this, 7 ways to invest in real estate even if you're broke. I'm not going to rehash that in this video, but what I will show you is a couple things that I'm going to have my eye on, especially if layoffs persist, and especially if foreclosures start to pop up. So this right here is the HUDhomestore.gov website. This is basically housing urban development. You can see all the different properties here based on your state that are being auctioned off at any given time. So it just depends on what market you want to invest in. This is a super powerful website. My lawyer back in 2013 was buying up houses here in like a Class A rental property. He was buying them for pennies on the dollar, like literally for 20, 30, 40 grand cash, right? So those properties were renting from like 12 to 1,500 bucks a month. Now they're worth, I'd say, 150 to maybe 190, 200 grand, give or take. Keep in mind it has been 10 years. But he was able to scoop them up for pennies on the dollar, make cash flow, and he owns them free and clear. And he's got the equity appreciation as well. So this is what you want to look at in times of real estate bubbles popping. The other thing I'm looking at is sheriff sales. Okay, so this is specifically for Cuyahoga County. This is basically where properties are auctioned off, right? These are foreclosure sales. It's exactly what it sounds like. I'm going to have my eye on that as well. If people start losing their jobs, they can't afford their mortgage, if they don't have money for a rainy day, these foreclosures, you're able to pick up properties for pennies on the dollar if you know what to look for. The only con is a lot of the times you don't have access to these properties. You can't get inside them, to vet them and see, if they have serious issues such as foundation, for example, but that's outside the scope of this video. And then number 3 is FUNDRISE. FUNDRISE is essentially a syndication platform. Real estate syndications can be a great way for individual investors to participate in larger commercial real estate deals and help outpace inflation. If you don't want to vet sponsors but still want this exposure, I personally use FUNDRISE. I've invested my own money with them since 2019 and continue to do so. FUNDRISE is essentially a platform that allows you to invest in private real estate deals that you most likely wouldn't have access to or enough capital to do so on your own. This is all done through your mobile device or desktop, and it's super simple to set up. The nice thing is that you don't have to be an accredited investor to use FUNDRISE. At the time of this recording, they have over 371,000 active investors, $6 billion of assets under management, and $223 million in net distributions earned by their clients. Since you don't have to be accredited, any U.S. citizen or permanent resident over the age of 18 can invest. Investments can be as little as $10 and all the way up to $100,000 or more. Their most popular tier, which is their core portfolio, starts with an initial investment of $5,000. Listen, inflation crushed the average saver's portfolio in 2022 with inflation rates higher than 7%, while the average savings account was earning a fraction of that. So real estate has historically kept up with inflation in the worst of markets, and other markets, it's absolutely blown past inflation in overall returns. So FUNDRISE is the country's largest direct-to-investor alternative investment platform built to outperform today's volatile market conditions. Overall, I'm happy with my FUNDRISE portfolio, which is at 5.6% return year to date, compared to the S&P 500 being close to negative 20% year to date. If you're interested in adding real estate to your portfolio, check out the link in the description below and start the new year off by diversifying your portfolio with FUNDRISE. Okay, so moving on from real estate, number 5 is Bitcoin. And this is where I get all the hate in the comments because people don't understand money, the properties of money, what money even is, what fiat currency is, what the petrodollar is, geopolitics, yada, 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 right? I'm not going to get into that video, into this video right now. But notice how I specifically say Bitcoin and not the rest of crypto. Bitcoin has a marketing problem. It is part of the crap coin casino, if that makes sense. When people think crypto, they associate Bitcoin with crypto. These couldn't be further apart. Based on many different things. A lot of these altcoins, aka crap coins, I'm not going to swear in this video. It's one of my New Year's resolutions. But basically, they have faces to them. They have CEOs. They have CMOs, chief marketing officers. They have marketing teams. They have they're surrounded with celebrities. They're surrounded with all these different things to get you to invest in their pump and dump schemes. 99% of altcoins are crap, okay? Straight up, full stop. Bitcoin is not. Bitcoin is different, and I'll tell you why. The reason I'm investing in Bitcoin in 2023 is because that the halving is 436 days away. So if you don't know what the Bitcoin halving is, it's basically when the reward of mining a block gets cut in half. So when Bitcoin was first created in 2009, if you basically mined a block or verified a block, you get rewarded with 50 Bitcoin. In 2012, that gets cut in half to 25 Bitcoin. 2016, 12.5 Bitcoin. 2020 was the start of the last bull market, 6.25 Bitcoin. And in 2024, this is going to get cut in half again to 3.125. So why is this important? Well, this is going to happen in April of 2024 because typically after every halving, the price of Bitcoin explodes. So you can see here after this halving, the price exploded. After this halving, price exploded. After this halving, price exploded to the point where we reached, I believe, $68,000 for this cycle. And then, it goes down, goes down, goes down like clockwork, right? So after 2025 or so, there may be a good chance that we see six-figure Bitcoin, maybe 2026. A lot of people think I'm crazy when I say that, but I'm not. I mean, I don't know how else to explain it in a 5-minute YouTube video, but I'll just tell you this. Read these 3 books, okay? Just do me a favor. Don't even do it for yourself, okay, or your kids or your grandkids. Read The Bullish Case for Bitcoin, read Inventing Bitcoin, and read The Bitcoin Standard, and then read The Fiat Standard. That's all you need to do. Just read those books, and you'll understand what time it is, okay? So moving on, number 6 is precious metals. So I know this is more of like a boomer kind of a thing, like, the crazy old guy hoarding gold in the drywall of his house, or, in the backyard of his, he's digging holes in his backyard. But I do believe in precious metals. And at the end of the day, you have something cool to pass down to your kids or your grandkids. When everything goes digital with central bank digital currencies, fiat money is already 99% digital. Your credit card's digital. Everything's digital. Stocks are digital for the most part. It's cool to have something tangible, and that's proven to be a preservation of value. So in Roman times, 1 ounce of gold could buy you a nice tunic. Now, an ounce of gold can buy you a nice suit, right? $1,900. So typically what I've used in the past, actually for the past 7-8 years now, I buy all my precious metals from JM Bullion. You can see my order history here. I have orders going all the way back to April of 2015, May of 2015, June 2019, December. A few weeks ago, I bought a bunch of gold. The thing is, guys, it's I actually have a lot more transactions on JM Bullion, but I check out as a guest. That's just my account. So absolutely check them out if you want to buy physical, tangible gold. So what I'm doing is I bought an ounce of gold like a couple weeks ago. I want to do that every year for the rest of my life. That way, I can give it to my kids, grandkids, things like that. So I don't have anything else that I'm investing in. I was going to add things like businesses. I was going to add things like, YouTube channels. I was going to add, local businesses. But at the end of the day, I'm kind of spread thin with this channel enough as it is. And then also being, a father and, all the stuff that comes with family. I'm trying to lead a lifestyle business, which comes from this channel. And you also have to realize, guys, you need to invest. I know this is like the corny part that like every influencer talks about. You need to invest in yourself. So the last one for me is investment in my time. So I also want to learn, piano. I'm taking piano lessons. What else? Picking up a new hobby, reading books, things that don't need to be said in this video. But invest in yourself, because that's going to be your highest ROI. No one can take away the knowledge in your head. And also no one can take away the skills that you learn. So for me, that's going to be piano. There's a lot of physical goals I have, and a lot of mental goals and personal goals and travel goals. But I just wanted to go over my finance ones in this video. So I hope you can use this as a guide. I'm just a regular person, just like you. My parents are immigrants. Like, I was born and raised in Cleveland, Ohio, dude. I still live here. I come from a normal middle-class background, okay? Grandparents didn't speak English. Parents came here with no money, that kind of a thing. So if I can do it, you can do it. Stay the course. Everything I'm teaching you here in this video it may not make you ridiculously rich overnight, but it is the simple path to wealth, in my personal opinion. So as always, I hope this video was helpful. If it was, please share it with a friend. I have over 925,000 subscribers. My videos don't get shown to anyone. Don't know why, but it is what it is. So thank you so much for watching, and have a prosperous day. No matter how balanced and nuanced these videos are with the stuff that I talk about, whenever I bring up Bitcoin, there's always the one dude in the comments, I don't invest in imaginary money. I stay away from it. What do you think your dollar is, dude?